Hello, ladies and gentlemen. My name is John with the Residual Group. Today is July 13th, 2016. It's 10:45 a.m. 10:47 a.m., excuse me, to be exact. U.S. Eastern Time. Right now, we're looking at the pair pound yen, in which I'm currently in a short position. This is a live trade. We are heading in the right direction. Um, we're about at 38 pips. My target is at around 290. My stop is up here around 110, which gives us a risk to reward ratio of well over 1 to 2, which is good. That's just my preference. I like um, risk to reward ratios, anything over 1 to 2. I'm not a big fan of 1 to 1, and obviously nothing under 1 to 1. You wouldn't want to be trading anything less than that. You wouldn't want to be risking, surely wouldn't want to be risking more than what you want to get in. You want to lock in as much profits as you possibly can here. The strategy that I am trading with is the strategy that I always trade with, and that is price action or price movement. You may have heard of it before. I don't like to use indicators. I don't use them. When I first started trading, I did use them. They confused the heck out of me. A lot of them were very contradictive. And so I kind of did some research and found a better strategy, which is, like I said, price movement, price action. And that is based solely off of strong resistance and strong support levels. I look back into previous history of the charts that I'm trading with. I look for strong support levels. I look for strong resistance levels. I set those levels, and that gives me a good idea of where I want to enter trades, where I want to set my stops, where I want to set my limits, and I go from there. So this is pound yen. I got in this trade last night. I found a decent entry point right here around the 138.50 level. Like I said, I looked left, and you can see over here some strong resistance that gave me an idea of where I wanted to get in on this trade. I set my stop just slightly above this wick right here. I like to set them anywhere to 10 to 20 pips above that wick right around there. It gives me some headroom. So just in case it's the next candle tests it, we have an extra 10 to 20 pips to where, hopefully it doesn't break through where my stop is. And it's done that. We're trading on an 8-hour time frame. Sorry, I didn't let you guys know that in the beginning, but we're trading on an 8-hour time frame. I like to trade on 8-hour time frames. It's just something that I like to do. 8 hours, 6 hour. I usually don't go any lower than that. Sometimes I like to trade on 12-hour time frames, but strictly 6 and 8 is kind of where I like to get into my trades at. So, like I said, I got in last night, and here's two doji candles that formed, which kind of gave me some indecision as to where buying pressure was. When this doji candle formed, it kind of popped an idea into my head. Not really kind of an idea, but just from previous research, kind of letting me know that this buying pressure is kind of fizzling out here. So that could be a good sign of some sellers coming in. And so far, so good. We kind of see the sellers starting to push the price back down. We're kind of at 60 pips right now, heading in the short direction. The bears have kind of taken over control, and that was a sign of indecision from this doji candle. I'm not really going to get into the doji candles and the types of candles. If you don't know that at this time, then you might want to go back and do some reading. I can recommend some books to you guys, or other, YouTube videos. Maybe you guys can subscribe to kind of get you know, the beginnings of currency trading, what candles mean and different candle formations. But right now, we're just going to strictly talk about the pair pound yen and this strategy that I chose. So basically, right here, we're in this short position, looking for it to go down to this 289 spot. Hopefully, it hits it. If it comes down close to it and kind of starts to consolidate and move back up away from my limit, I'll lock in my profits. There's nothing wrong with doing that. Like, for instance, let's say it comes down to, let's say my limit here is 289. Let's say this thing comes down to 280 and it just kind of sits at 280 for another couple of hours. And then it starts to go back in the other direction. I'll lock it in. Um, like I said, I'm risking 110, but if I can take 260, 250 out of it, I'm fine with that. That's still a great move. Like I said, this limit is based off of, I think, decent support right around in here. It's tested before, right around where that Brexit news was. It dropped, it came back up, it kind of dipped back down here, tested, came back up, tested again, dipped back down here, and just shot straight up. So there's a good chance that it will go back down here, and hopefully it does. And hey, maybe it'll go all the way, you know, back down to this 230 level, which I doubt. That's a huge drop from where it is now. I mean, you're talking about close to 800 pips. For some news to happen like that, it would have to be extremely drastic. Which brings me to another point. Um, always be aware of important news that comes out. They move the market. Never trade strictly off of technicals, because you could get burnt if you're not paying attention to things of high importance. You know, rate decisions, gross domestic product. You want to be paying attention to these high importance employment changes, unemployment rates, obviously rate decisions. So always be aware of news that's coming out. Another thing, currency correlations.